All right, good morning, everybody. Welcome to another mobile live stream here on both Facebook and on YouTube Live. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with everybody. Hopefully, everyone is doing well. Hopefully, you guys can hear me out there. If you can, just let me know in the comments or in the chat. Let me make sure everything is coming through fine. Once we have confirmation of that, we'll go ahead, jump right into it here today. Mark, while we're waiting on confirmation, just to answer your question briefly, I know I wasn't in on Tuesday or yesterday. I will be in the Jockey Club tomorrow. So if you guys want to see some day trading Fridays, make sure to be in the Jockey Club tomorrow. I will be there live with you guys, so I'm looking forward to it. Good morning, VV Nation. Let's see some VV Nations in the chat. Hopefully everyone is doing well. Hopefully everybody's having a good morning so far. Markets are looking decently better so far, so I like seeing that. But with that, for anybody new, welcome. My name is Patrick France. I've been here at VectorVest for over 11 years now, and every single Thursday we talk about the VectorVest Stock Advisory app. It's the most comprehensive trading app out there, and we take a look at what's going on in the market at the beginning. Then we jump into our topic of discussion, and then as always, we save the fan favorite to the very end, where we'll analyze any stock that you want to take a look at and show you how you can do so in less than 10 seconds utilizing the app. So, loud and clear, thank you for that, Kathy. Good morning, everybody. Hopefully everyone is doing well. Hopefully you guys are ready to learn. First time in a while we're going to be talking about this particular subject, but it's a very pertinent subject for what's going on in the markets, because whether we are starting to enter into a bear market or whether this is just, a pullback before a major or the next move higher in the bull market. We talked about the bear bull market scenarios last week. This will be allowing you the ability to take advantage no matter what the market does. So that way you can change your plan or change your direction at the drop of a dime and be able to make money in the market no matter which way it's going. Sandeep is asking, do we need the subscription for the mobile app? If you have the VectorVest 7 software, Sandeep, then no. The VectorVest Stock Advisory app is included with that. If you don't have the desktop app, then you can click on the link in the description of today's video. You can sign up for the 2-week free trial, and that way you can put it to the test. And then, if you want to continue, you can continue from that point. So as always, if you're new here, if you're just coming in, we only have 5 likes so far. Make sure to smash that like button for everybody. Make sure if you're on Facebook to share this out with all your friends and family, so that way everybody else can join. We can continue to grow this awesome community and show them how easy it is to utilize the VectorVest Stock Advisory app and manage your overall portfolio. All right. So with that, looks like everything is coming through. Hello, Nini. Hey there, Jeff. Fathy, what's going on with Wire? Not sure. Haven't looked at it today. Hey there, Trisha. Hopefully you're doing well. Good morning. Let's make sure we've got all the early questions out of the way. Perfect. So with that, welcome everybody. Hopefully everybody's doing well. Welcome to our stock advisory coaching sessions we do every single Thursday. Once again, let's start off, take a look at what's going on in the market. Then we'll dive into our topic so far. So right at the very top center is where we always start off with the market timing gauge. And this helps us summarize what's going on in the market at any given point. So right now we can see we're 3 ticks into the yellow, the market is neutral, and still VectorVest does not advocate buying any stocks at this time. No surprise, the market's been selling off the last few weeks, And therefore, we still don't see enough consistency in the market to really give that confidence to say, okay, it's time to buy. So right now, we're still advocating caution and holding off from buying any stocks at this moment. We scroll down, as always. If you want to see a weekly or a nightly update, you can watch the daily market update right there from the Stock Advisory app. And then as we scroll down, take a look at the color guard. That's where that market timing gauge gets its color from that top row of lights in the color guard. So the color guard analyzes 3 parts of the overall market that we use to get our market guidance. So the first part that we look at is the price, which is talking about the price of the VectorVest composite. For anybody not familiar with it, the price of the VectorVest composite is an arithmetic indexed average of about over 9,000 stocks that we track each and every day. And this gives us a better representation on what's actually going on in the market, because it's not just looking at subsections of the market, such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at over 9,000 stocks into one single index. The second indicator is going to be the RT, or relative timing. Now, the relative timing is looking at the short-term price trend of the overall market here, cast on a scale of 0 to 2. So anything above 1 would indicate the short-term trend is up. Below 1, as it is now at 0.84, indicates the short-term trend of the market is down. And then last but not least, we then get the BSR, or buy to sell ratio. Now, the buy to sell ratio is looking at the number of buy rated stocks in the database to the number of sell rated stocks in the database. We use this information to help get an understanding of whether there's overall market strength or overall market weakness. So if there's more buys and sells in the database, the buy to sell ratio would be above 1, which would indicate overall market strength. And then below 1, as it is now at 0.35, indicates there's more sells than buys in the database, or overall market weakness. Hey there, Nectarios. Hopefully you're doing well. Good morning, Judy. Hopefully everybody is doing well. Hopefully you guys are having a good morning so far. And then so the trends of these 3 indicators, the price, the RT, and the buy to sell ratio, are comprised to come up with our MTI, or a market timing indicator. It's cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So above 1 would indicate the underlying trend of the market is up. Below 1 would indicate the underlying trend of the market is down. So at 0.58, we are in grossly oversold territory based off of historical numbers with the MTI. And that indicates, though, that the underlying trend of the market is down. After the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. The first part is looking at the short-term, or simply weekly trend of the market, or what we like to call the primary wave. Since it's down, that simply means that the price of the VectorVest composite today is lower than it was 5 trading days earlier. The second part of the trend is looking at the underlying trend, or the MTI. So since the MTI is below 1, the underlying trend of the market is also down. After that, we finally get to the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market, and our last signal we get to get out. As you can see with that down arrow, that represents we still remain in a confirmed down situation. So for our most conservative investors out there, we're still staying out of the markets, being patient, waiting to see that red down arrow turn to a green up arrow. All right, so as always, we do like to scroll down, take a look at the advanced declines, and this is a good indicator to look at every single day, because this tells us the number of stocks moving higher for the session and the number of stocks moving lower for the session. Whenever we look at the advanced declines, we want to see a 2-to-1 bias in either direction. So if the market's moving up, we want to see twice as many stocks advancing than declining. If the market's moving lower, we want to see twice as many stocks declining than advancing. The reason why we look for this is because that tells us if we went out and bought a stock today, for example, we know at least twice as many stocks are moving higher than moving lower. So the probability of us getting into a stock that's moving higher is higher, and that puts the probability in your favor. And that's what trading is all about, is putting the probabilities in your favor to have the highest potential for success there. So as we can see right now, 73% of stocks are moving higher, 15% or roughly 16% of stocks are moving lower. So clearly meeting that 2-to-1, well over 2-to-1 bias, or preferable ratio that we're looking for. So therefore, we do have some strength going on in the overall market today. Then as we scroll down, take a look at the major indices at the very bottom. The Dow is up 1.25%. The Nasdaq is up 2%. S&P is up 1.5%. VectorVest composite up 1.4% so far. So major indices are rallying back. I know major headlines yesterday were talking about yields going up and that affecting growth stocks, and the NASDAQ potentially entering into correction territory. So we're seeing a slight bounce so far off of those lows, and definitely a positive sign. But once again, as we talked about, when we look at the color guard, we still have 3 yellow lights. One day does not make a trend. Therefore, the market is neutral, and VectorVest does not advocate buying any stocks at this time still. All right, so yeah, green is good. Completely agree with that, Mark. Good morning, Prasad. Hopefully you're doing well. All right, so with that, let's go ahead and dive into our topic here today. So what we're going to be looking at is ETFs, exchange traded funds. If you're not familiar with them, exchange traded funds are basically just baskets or a whole bunch of stocks, or they could be a fund that allows you to trade a equity that you typically wouldn't be able to do, such as like commodities, for example. So what we're going to do is we're going to go down here to the pick section on the left-hand side. We're going to jump into the screeners for today. Take a look at the futures or featured screens. There we go. Rajan, can you provide me the best tip for a new person who's interested in investing or to invest in day trading or long term? So Rajan, if you're looking for day trading, the best place I could talk about, and I think a lot of people here in the community could agree with, coming and taking a look at the Jockey Club, the VectorVest Jockey Club. I personally do a lot of day trading there. So that's going to be a great place to learn about that. Long-term investing, there's a whole section here under the education aspect or education portion of the mobile app that has a lot of free, great resources you can use. There's a whole course even on how to get your portfolio set up or get you started in the right direction. So I'd highly recommend starting off there and then utilizing the resources that VectorVest has for you to help any questions that you have after that, and help you really develop what you're looking for, what plan suits you the best. All right, so with that, let's go ahead. Since we're in the screeners, we're going to start off ETF pairs, bullish and bearish. So this is something that was created by you guys out there, for you guys out there during one of our live sessions a long time ago. And what we're going to do is we're going to start off on the bears. Market has been moving lower, so we'll take a look at some of these, get an idea of what they are, so that way you guys can have a good understanding and be able to start putting this to use sooner rather than later. So the bearish ETFs, these are going to be a lot of double and triple leverage contra ETFs. If you're not familiar with the word contra ETFs, contra just means contrary to the underlying fund. So these are going to be looking at, let's say, the major indices, for example. So the Dow, the NASDAQ, and the S&P. So when the S&P goes up, contra ETFs would go down. Well, if the market or S&P is going down, these would be going up in value. This is a way you can gain exposure to a sell-off in the market without having to short stocks, without having to have a margin account, and be able to either hedge your portfolio or try to take or turn a gain in a down market as well. So a lot of potential here, but remember, we're still in the late stages of a bull market. We haven't quite gotten out of that climate yet. So when you're in a bull market, make sure that you're careful with your positions and make sure that you're not trying to shoot for insane gains, 50, 100%. You're looking for more short-term, quick gains, maybe 10 to 30% at max, and then moving on, or then closing out the position. Still looks good. You can always get back in, but at least you're locking in your gains. So right now, markets are rallying sharply off of those lows that we saw from yesterday's close. And therefore, the first one we're looking at is LABD, going to be a biotech ETF. So as we can see, it's down 10.5% because this is a triple leveraged ETF. So therefore, as the biotech industry or sector moves lower by 1%, this is going to go up 3%. So if it's moving higher by 1%, this is going to go down by 3%. Well, if you don't know what the leverage is on it, that's okay. Just simply tap on it. Come down here to the stock analysis report, and right at the very top in the business description, you can see it's a biotech bear 3 times shares seeks to replicate 300% or of the inverse of the performance of the S&P 500 or S&P Biotechnology Select Industry Index. So this kind of gives you a summary and tells you if it has leverage, you'll see it right here in the business description, telling you how much leverage that ETF has. So that's a great way, especially if you're getting familiar or just getting into ETFs, great way to check before you do, because you always want to make sure that if you're getting into leverage ETFs, especially, that they still meet your comfort range. Because if it's leveraged, or let's say 3-to-1 leverage, that could move quite drastically. And if you're not comfortable with something that can move, 6 to 10%, maybe even more sometimes in a day, then maybe you should, skip over that one. Maybe look at a 2 or a single or a non-leverage ETF. Don't know why that's coming through. Let me go ahead and turn that off real quick. Cancel that. Give me one moment, folks. There we go. Perfect. I could kick myself for making a huge mistake with ATVI. Bought them out. I put a limit order when I meant to put a stop order. Oh man. Sorry for that one, Maria. Yeah. That was news to me that that deal is coming out, but hey, that definitely is going to strengthen Microsoft's online gaming, their Xbox, all of that. So it's going to be interesting to see how they utilize that going forward in that specific situation. All right, so getting down into it, that was LABD. We talked about that, the biotech triple leverage. Next one here is SRTY, or shorty, some people call it that. It's the Russell. So if you're not familiar, once again, if you're not knowing what that ETF is looking at, when in doubt, click on it, select the stock analysis report, and in the business description, it'll tell you it's an exchange traded fund incorporated in the USA. The fund seeks investment results which correspond to 3 times or 300% the inverse or opposite of the daily performance of the Russell 2000. So if you're somebody who's more of an aggressive trader, trading those lower dollar, smaller cap stocks, this could be a ETF that you'd be comfortable with because it could add a hedge to those stocks that you're holding. So therefore, offsetting some of the losses in those stocks while making up some of that. Therefore, you don't have to close out of those positions, allow you to use them as more of a long-term position. So it's a great opportunity to mitigate some of that risk or some of those losses that could potentially happen. So there you go. Going back into it, PZA, SQQQ. So anytime you see, if you're not familiar with some of the symbols, anytime you see QQQ, that typically means it's referring to the NASDAQ, not SRTY, but anytime you see 500, obviously that's going to be referring to the S&P 500, which you can see down here with SDS, and then 30 or DXD, obviously standing for the Dow 30 there. So this allows you, if you aren't familiar with the names, looking at the full name of it right below there. And if you still haven't or still don't know what that's looking at, as always, pull up the stock analysis report. We'll analyze it there for you. All right. So if you guys are enjoying it, make sure, as always, hit that like button, share this out. If you're on our YouTube page, make sure, if you're not already subscribed, subscribe to the channel, turn on notifications so that way you get notified every time we have a new live stream or every time we have some new content coming out for you guys. I know somebody was asking here this morning before we started how they can get notified for when we do these live streams on the YouTube page. And that's exactly how. Just click on the notification bell, turn on notifications. So that way you can also, or not only know when we're going live, but you can click on that notification. It'll bring you right to our live streams as well. Because not only do I have this Thursday stream, but also Glenn Tompkins has a few other streams that he does throughout the week. His next one is going to be at 2 p.m. Eastern today, and that is going to be Trending Thursdays. So if you guys want to see what's hot, what's not, what's making news, make sure to head over to that at 2 p.m. later today. All right, so we looked at some of those. We've talked about, we looked at a bunch of triple leverage. Well, let's say you're not that aggressive. Let's say you're somebody who's not comfortable seeing a stock or an ETF move 9 or 6 to double digit percent, maybe 10, 12, 15% sometimes even. Well, taking a look at QID. This one, we go pull up the analysis report. It talks about looking at the triple Q or QQQ, which is the NASDAQ. And this is a non-leveraged, excuse me, corresponds to twice the inverse daily performance of the NASDAQ 100 index. So this is a double leverage here. And if you go back, scroll down, thought I had, do I have it in here? Yes, where is it? I thought I had the non-leveraged in here as well. Maybe I haven't added that yet. Well, I'll go ahead and add it here in a little bit after today's stream. I'll go ahead and add the non-leveraged ETFs in here for you as well. That way you guys have access to them to be able to help everybody out even more so than what we have already here. But so one of the key headlines, and if you're following the markets and following the headlines, one of the key headlines that made the big news yesterday was China's comments on the Fed tightening and their tightening of their policy and how that could affect emerging markets. Well, if you're worried about emerging markets selling off, especially as the Fed tightens, here's EEV. This is one I actually traded quite a while ago. Last time the Fed was potentially getting ready to tighten their fiscal policy there. But if you go ahead, take a look at it, pull it up, the analysis report, an emerging markets exchange traded fund that results in corresponding to twice or 200% the inverse of the emerging markets index. So this is a great way if you're worried about that as the Fed tightens. This is something that, if you read those comments, saw what, the president of China was saying, this could be a way of taking advantage of that if you feel that that's going to be, a concern in the markets or global markets around the world. So it could definitely be of interest to keep an eye on or at least be aware of as we go forward. So getting out of here, going back, let's take a look at the bulls here today. Now, as we talked about always, right now we're not advocating buying any stocks in the market. So no matter what these ETFs are doing, the bullish are doing here today, one day does not make a trend, but these are definitely ones to start, going through, getting on your radar, building that shopping list, getting ready. And the great thing about these, you're using these ETF pairs, is you don't need to worry about individual stocks. You don't need to worry about, is this one going to outperform the industry or the sector, or is this one going to underperform? This is just the average. So it's an easy way of dealing with the markets, taking a look at the overall trends, which VectorVest does a phenomenal job for you with in the daily color guard reports. So this is a way of taking advantage of just the broader trends. Granted, you're not necessarily going to outperform the market as much. Well, typically you are, because if you're using, leverage, you could outperform, but you're basically taking the average. So you're not really going to be shooting for those insane gains like you can with individual stocks that have, random news coming out from time to time that makes the price shoot up to the moon. But it's a great way if you're taking a step back, a less involved approach, just trading the pairs up and down. Charts are a great way to help you out with that as well. Plus, the analysis that VectorVest gives you can greatly increase your performance utilizing a simple strategy like this. All right, so let's go take a look at it. UCO, as we've been talking about for well over a year now, almost a year and a half really. Oil's been something that we've been very bullish on for quite some time, and as we can see, the best performer right now is an oil ETF. So UCO, we go and take a look at it, go to the stock analysis report. The investment will seek to replicate net of expenses twice the daily performance of the Dow Jones AIG crude oil sub index. So oil basically, and it'll be twice leverage, or 2 times leverage, if you will. And therefore, if you want to take advantage of the bull market that we have in oil, especially as supply is still of an issue, exports are still not meeting their expectations or their forecasts that they had set for themselves. They're missing those. That difference between the supply and the demand is continuing to widen. So if you're of the mindset that oil still has a lot more room to run, I forget who was it, but one of the major analysts came out and said oil would be $100 a barrel in the next 12 months, I think. If you're of that mindset, UCO or even another one with Gush could be a great opportunity for you. So one other key aspect that utilizing the VectorVest Stock Advisory app, especially with utilizing the ETF pairs, can help benefit you with that I haven't mentioned yet. Let's click on ERX, for example. Energy Bull. When looking at ETFs, they don't report quarterly earnings. They don't have, financial balance sheets that you have to go through and break down. They make it pretty easy when analyzing it because they don't have that financial balance sheet that you have to analyze for an individual stock. The RV and RS are always going to be pegged exactly at 1. So whenever you analyze any ETF inside of the VectorVest Stock Advisory app, all you have to do is focus on the RT. Now, if you recall, RT stands for relative timing. It looks at the short-term price trend of the individual equity here. So if it's above 1, the short-term trend is up. Below 1 would indicate the short-term trend is down. Now, not only does it indicate up or down, but since it's cast on a scale of 0 to 2, it also shows the magnitude of that move. So above 1 to closer to 2 it is, the stronger the uptrend. Below 1 to closer to 0 it is, the stronger the downtrend. So for ERX, for example, 1.7, we can tell it has a really strong short-term uptrend. Well, if we go take a look at the graph, go put it on a 3-month, it's gone from $30 all the way up to about 41 and some change, all within a matter of a few weeks. I would say it's a pretty strong uptrend on a short-term basis, and that's exactly what the RT is telling us here. Jeff, NRGU. We can take a look at NRGU in just a few moments. So if you guys have any questions about these ETFs, what these ETFs are looking at, or how to understand any of the analysis that we're seeing on them, feel free to let me know in the chat or in the comments. I'd be glad to go over those questions for you. And as always, if you're new here, never hesitate to ask questions because that's how you learn. And most likely, if you have that question, there's at least one, maybe most likely 2+ people out there that also have that question as well. ETF pairs, we are trading only one ETF at a time. So Marie, these ETF pairs, they're paired together. So if there's one, for example, UCO, if that's the bullish ETF for oil, if we go to the bearish, go down to the bottom, SCO is just the opposite of that right here in the bearish list. So every single ETF that you find in one of these lists has its inverse or the opposite ETF in the other list. So that's why they're the pairs, is because they're paired together, and the bulls are the ones that are going up when the market goes up are in the bullish list. The ones that are going down or going up when the market goes down are going to be in the bearish list. So that's why they're pairs, is because they have their matching counterpart in one of these lists. So that way you can trade one or the other. So LABD, for example, that's the top bearish ETF pair right now. If we go to the bulls, scroll down, LABU, which is just the inverse or opposite of LABD, is at the very bottom of the list. So these will just be a inverse or flip-flopped list to help you be able to find, if you wanted to trade biotech, for example, you'd be in LABD. Then when you start seeing LABD giving you that signal to sell, you start seeing some bullishness coming into the market. You can go here, go to LABU, you find the exact opposite, and then you can take advantage of it as it starts to move higher and, just trade that one. Or the NASDAQ, you could also do this on the S&P. Any way you want to do this. Tom is asking, where do we find these lists? So great question, Tom. So if you're pulling up the stock advisory, let's go start off on the overview page. The first page you come to, once you're into the app, go down to the screener on the left-hand side. Choose the featured screens at the top, and towards the top, you'll see the ETF pairs, bullish and bearish. So there you go. Right here, simple to find, easy for you guys to be able to gain access to. Everybody should have access to this, and you can make your life a lot easier. You're just focusing on one specific area and just trading it up and down, that makes it a lot easier than having to manage, 10, 20, 30 different stocks and having to constantly be looking at, different analysis on each one and trying to remember which one goes to what. This is a simple way to, just take advantage of focusing on one aspect, trading it up and down. All right, so hopefully that answers your guys' questions. If you have any other questions throughout it, feel free to ask. As always, though, let's go ahead and start with the fan favorite. We'll analyze any stock that you want to take a look at. I'll show you how easy you can do so in less than 10 seconds. Hey, Corey, hopefully you're doing well. Hey, no apologies. Glad you're here today. So, first and foremost, Jeff asked about NRGU. Let's go ahead and pull that up. NRGU, an ETF. Therefore, all we have to do is focus on the RT, or relative timing. At 1.86, we can see it's an extremely strong uptrend. Looking at oil stocks based off the name, so no surprise there. Oil's been our best performing ETF pair, or the bullish ETF pair. And so therefore, no surprise seeing it in a strong uptrend right now. Do you place other GT stop loss? ETF as well. So yeah, Sandeep, you should always, no matter whether you're trading an ETF or you're trading a stock, you should always have a plan in place. Always have your limit set for knowing, what your max loss is going to be to cut your loss and move on. Knowing when you should start protecting some of your profits. Having that 50% rule, knowing, if it goes up, hasn't met your target that you're looking for, starts pulling back, to lock in at least 50% of your max profit of anything over that 10% gain. So yeah, you should always still have a plan in place, whether you're trading ETFs or whether you're trading a stock. So yes. All right, let's go see XRT. Interesting one that you picked here, Steven. XRT. Once again, another ETF. Therefore, your focus is going to be RT at 0.74. It shows that it's in an extremely strong downtrend. So therefore, right now, the stock or ETF is not favorable. Etsy, ETSY. So looking at ETSY, now you have a stock, we can analyze the fundamentals together. So we start off on the left with the first indicator, the RV, or relative value. Now, all four of these indicators are going to be cast on a scale of 0 to 2 to make it easy for you guys out there. Anything above 1 is favorable, below 1 is unfavorable. So with RV, it's looking at the long-term potential of the stock over the next 1 to 3 years. So 1.22 shows the stock has good long-term potential over the next 1 to 3 years. The second indicator is the RS, or relative safety. It's looking at the consistency and the predictability of a company's financial performance. In other words, it's simply an indicator of risk. So above 1 would show less risk involved with the stock, below 1, more risk with the stock. At 0.96, it does show us that this stock has a little bit more risk than the average stock out there. Third is going to be RT, or relative timing. We've talked about that a lot here today. Relative timing is looking at the short-term price trend of the stock. If it's below 1, closer to 0 it is, the stronger the downtrend, tells us this stock is in a strong downtrend right now. Overall, this stock is not favorable based off the VST being below 1, with the short interest being over 500%. So, I mean, it's definitely alarming, and I hope something comes from the XRT there, Steven. I hope it's a good enough example and makes enough noise that it brings light to the issues with that, because I've stated for many, many years now, ETFs are going to be, they're a great trading tool. They're a great trade, but with all that's going on and how many ETFs there are out there now, somebody's got to manage these and make sure they're managing them properly. And if they're not, that could cause a lot of issues for the overall market as well. So, it's hopefully bringing light to a select few not managing these funds properly like they should be, and I'm hoping something positive comes from that. All right, let's see. CRWD. So CRWD, CrowdStrike. Poor long-term potential, a lot of risk associated with it. It's in a steady free fall right now, so overall the stock is not favorable. Let's see, ESRT. Go. While I'm pulling that up, Jim is asking, when the stock gets a new buy rating, this proprietary or is it based on technical indicator? So Jim, when VectorVest gives a buy, hold, and sell rating on every single stock every day, those are based upon a strict set of rules. So for example, to get a buy, there's 4 criteria that must be met. To get a buy, the price has to be greater than its stop price, which for ESRT, for example, you can see the stop price in the upper right-hand corner. The price has to be pulling away from that stop price. The RT has to be greater than 1, and the VST has to be greater than 1. If any one of those 4 conditions is not met, then it'll automatically get a hold. And if the price of the stock ever falls below its stop price, it'll automatically get a sell. So that's what the criteria are. It's not really proprietary, those 4 rules, but it's based off proprietary information or proprietary data there. All right, so looking at ESRT. ESRT has great long-term potential, but does have a lot of risk associated with it. That would tell us the stock is more of an aggressive stock. Looking at RT at 1, the stock's short-term price trend is neutral or flat. Therefore, the stock is basically average right now. JNUG, sure. Let's go ahead and take a look at JNUG. So JNUG, another ETF, therefore our timing is going to be the most important factor we need to look at right now. At 1.09, it is in an uptrend, but a weak uptrend in my personal opinion. Overall, it's favorable, but I'd prefer to see the RT at 1.1 or greater there. How do you find ETF like you were showing in the mobile app? So Sandeep, I believe, let me just double check here. They should be in the Unisearch tool if I'm not mistaken. Give me one moment, double check that. Searches, special searches. Give me one moment, I'm just looking for it. I know they're in the, I just got to find where I put them at, because I had to put them in the app, or I had to put them in the VectorVest 7 program to be able to find, or to be able to add them to the mobile app. Is it ETF pairs bearish, ETF pairs bullish? It should be. Just trying to find which folder I added them to here. Yeah, so they should be in. They should be in the ETFs folder. Should have started there. There we go. All right, let's go see. We did JNUG. What else do we have next? MELI. But great questions though. I love that. Love that question. Glad we could answer that. Hopefully that helps everybody else who is using the desktop app as well. So MELI, this stock, what is this stock doing at $1,100 a share? This is a poor long-term potential play, has a lot of risk involved with it. It's in a steady free fall. Overall, the stock is not favorable right now. IHT, poor long-term potential, a lot of risk associated with it, but the timing at 2.0, the strongest uptrend you could possibly get, therefore making it favorable. But with an RV and RS both below 1, that does tell us this is a speculative play with just a lot of momentum behind it. So be cautious with that. HEPS. So HEPS, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, it's not favorable here. BMRN. There we go. BMRN, poor long-term potential, does have a little bit more risk than the average stock out there. You're in a slight decline currently, so overall, not favorable. And Cairo Dave coming in as a new subscriber on our YouTube page. Welcome to VV Nation. Hopefully you're doing well. Glad you could be here today. Let's see. F, good long-term potential, a little bit more risk than the average stock out there. You are in a steady uptrend or short-term uptrend. Overall, still favorable right now. Buzz, C. So Buzz, looking at timing at 0.67, it is in a steady decline. So overall, it is not favorable currently. CLSK, good long-term potential, but does have more risk than the average stock out there. It's in a steady free fall right now. Overall, not favorable here. Apps. So apps, good long-term potential, less risk associated with it. However, timing is of the essence. Right now, it is in a steady decline as well. So therefore, it is not favorable based off timing. It's a good stock, just not the right time to be long in it. TQQQ. Looking at TQQQ. ETF, therefore, your main focus is RT at 0.75. Tells us it is in a steady decline. So overall, not the time to be in it right now. LUMN. Good long-term potential, less or a little bit more risk associated with it. However, you are in a steady decline currently, so overall, it is not favorable for the moment. Let's see, FANG. FANG has good long-term potential, less risk associated with it, really strong short-term uptrend. So overall, definitely a favorable play here. IBB. Another ETF looking at RT at 0.68 tells us it is in a steady decline. Overall, not favorable. ENPH, good long-term potential, about average risk associated with it. It has been getting hit pretty hard lately, so therefore it is in a strong decline currently. Overall, not favorable for the time. DVN, good long-term potential, but a little bit more risk than the average stock out there. Really strong short-term uptrend, so overall, stock's favorable. Let's see, PANW. ANW, isn't it? There we go. PANW. Don't know why. Did I lose internet? I didn't think so. Oh, I may have just lost internet for a brief second. I noticed my OBS showing that it dropped a little bit there. Go ahead, do this. Go. PANW, poor long-term potential, but less risk associated with it. So this is more of a conservative play. Looking at timing at 0.97, it is in a slight decline. So overall, it's favorable, but timing is definitely a little bit of a cause for concern right now. All right, let's see. Crocs, actually, RBLX was one. Let's make sure we get that. Roblox, poor long-term potential, a lot of risk associated with it. In a steady decline, so overall the stock is not favorable right now. Let's see, HON, but maybe Pelosi knows something that we don't about Roblox, so who knows. HON, good long-term potential, a little bit better than average safety involved in the stock. However, the timing is not quite right. It is in a slight decline on a short-term basis. Overall, the stock's about average currently. Let's see, BMW. Go. BMW, poor long-term potential, more risk associated with it than the average stock out there. It is in a slight decline on a short-term basis, so overall the stock is not favorable right now. DDOG, good long-term potential, a little bit more risk than the average stock out there. It is in a sharp decline currently, so overall stock is not favorable right now. ANTM, good long-term potential, less risk associated with it. You have a nice short-term uptrend, so overall, definitely favorable still. FTNT, good long-term potential, less risk associated with it. It is in a steady decline currently. It's a good stock fundamentally, but not the right time to be long in it. Microsoft, MSFT. Microsoft, good long-term potential, less risk associated with it. However, on a short-term basis, it is in a steady decline currently, so therefore we'd be holding off on it based off of that. Good stock, just not the right time to be long in it. Let's see. Let's get some of those. So LRCX. LRCX, good long-term potential, less risk associated with it. You're basically flat on a short-term basis, so be careful of the timing right now if you're long in it. Overall, it's a good stock. I need to see timing pick back up a little bit more though. EXROF. Of course, I gotta do it for you, Jay. Glad to see you here today. So, Extro, poor long-term potential, a lot of risk associated with it. It's been getting hit pretty hard. Most of these speculative stocks out there in the market have been getting hit pretty hard since the beginning of the year. So therefore, timing at 0.52, it is in a steady decline. Overall, the stock is not currently favorable. Let's see, SENS. I'll pull out all of them today. All right, SENS. SENS, poor long-term potential, a lot of risk associated with it. Has been in a short-term downtrend for a while. Overall, not favorable currently. And then GME, GameStop, poor long-term potential, a lot of risk associated with it. Has been getting hit pretty hard, so it's in a steady decline currently. Overall, not favorable. Let's see, Crocs, CROX. So Crocs has good long-term potential, less risk associated with it. However, just not the right time to be long in it. At 0.46 on the RT tells us it is in a steady decline, so be careful out there. Overall, it's a good stock, wrong timing. Let's see. There you go, Corey. KOLD. Natural gas ETF. So once again, with ETFs, your primary focus is RT at 1.48. It is in a steady short-term uptrend. Overall, this ETF is still bullish or still favorable for the time being. UPWK. Upwork. So poor long-term potential, a lot of risk associated with it. You're in a steady free fall right now. Overall, not favorable here. BAC. BAC. Good long-term potential, less risk associated with it. It's in a steady uptrend on a short-term basis, so overall, definitely favorable. Netflix earnings play, let's go see. So, I mean, to be completely honest, we talk about earnings all the time. Anytime a stock has earnings, be careful of trying to do an earnings play, because even if they have strong, consistent earnings, the stock is, consistently outperforming their earnings, let's say quarter over quarter, year over year for the last 10 years. If they say one wrong word, or if the overall markets are starting to sell off, even if they have a strong performance, that stock price could still go down. Or if they don't say the right exact thing for guidance going forward, that could also cause the stock to go down, even though the company is making money and outperforming how much money they're making compared to what analysts expect them to be. So be careful of earnings plays, because even stocks that have good earnings can still get upset if they have, one wrong slip of what they say about the stock going forward. Tom's asking, RT indicates up or down or relative to all other stocks. So up or down for that specific equity, Tom. So RT is, I don't know the exact formula. It's a proprietary formula that we use here, but it's looking at price action compared to, let's say, a week ago, and then quarter over quarter, and then comparing it to a lot of different time frames, and that's how RT is calculated. So it's specifically to that equity, unless you're looking at it on the overview page, which is looking at the VectorVest composite or the overall market there. All right, ZNGA. We'll do a couple of more here. So ZNGA, good long-term potential, but a little bit more risk than the average stock out there. RT at 1.22, it is in a steady uptrend. Overall, stock's favorable. Let's see, CNDT, good long-term potential, but a lot of risk associated with it. It is in a steady decline currently, so overall, the stock is not favorable for the time being. The call column on the home screen of the mobile. So yes, going back to it, or the overview page, we'll just quickly analyze or go over where we're still at. So right now, the market is still 3 ticks into the yellow. VectorVest still does not advocate buying any stocks at this time. We scroll down, we get the color guard. We can see those 3 yellow lights across the board. The calls column stands for our confirmed calls. Once again, our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get in and our last signal we get to get out. So therefore, you never want to ignore a confirmed call change. Right now, we still remain with the red down arrow that tells us we're in a confirmed down signal. So it takes week over week price action of the VectorVest composite moving higher. You also have to have, I believe, the buy to sell ratio going above 1, and the price has to be higher than the previous day to get a confirmed up. Just the opposite would be true for a confirmed down. All right, looking at the advanced declines, we're seeing the decliners picking up a little bit from where we first started here today, with the advances up almost 73%, just shy of 73%. Decliners up now 18%. So therefore, advances pulling back a little bit, decliners gaining a little bit of ground, seeing a slight softening in the markets. Looking at the major indices, the Dow's up 1.25%. Nasdaq's pulling back a little bit. It was up over 2% at the beginning of today's stream. Now it's up 1.8%. S&P's also pulling back a little bit, up now 1.4, so it's giving back about 0.1%. VectorVest Composite also giving up about 0.1% so far, up still at 1.33% for the session. So this is why, even though the markets are up today, be careful out there. Follow the guidance. When you see the guidance saying, hey, right now is not the time to go buying or go buy stocks, even though the major indices were up well over 1%, most average investors would see that and say, okay, yeah, I'm going to go ahead and jump right into the market, start buying a position or two, adding it to my portfolio. Luckily, VectorVest has proven analysis for you that tells us, hey, one day doesn't make a trend. Don't let your emotions get involved. Wait for more consistency. Wait for a better opportunity, which will identify for you right at the very top of the VectorVest Stock Advisory app. So if I didn't get to analyze your stocks today, I do apologize. We have a lot of people here today. If you haven't already, hit that like button on both Facebook and on YouTube. Share this video out. Click on that little share button in the bottom right-hand corner if you're on our Facebook page. Make sure when you click that share button, choose public so that way it gets it out to everybody and not just the people that you choose for it to be seen to. Helps spread the word, helps continue to grow this awesome community, and that does help me out as well. So I appreciate everybody tuning in here today. Once again, if I didn't get to analyze your stock, I do apologize. It wasn't intentional. If you're already a subscriber, you can simply open up the app, tap on the little magnifying glass in the upper right, and then then type in your symbols and do the same analysis on your own, wherever you're at. If you're not already a subscriber, click on the link down in the description below, sign up for the 2-week free trial, put it to the test. Seeing is believing. You can do this right after or wherever you're at on the go, whether you're doing your shopping, whether you're out and about, running some errands, whatever it may be. You can do this from the palm of your hand. So if you haven't already signed up, make sure to click on that link today, sign up for the free 2-week free trial, and give it a go. And on that, thank you all for everybody tuning in here today. It's been my pleasure being with you guys. Hope you guys have a great rest of your trading day. Be careful out there. Make sure to pay attention to the daily color guard report every single night to keep you up to date with what's going on in the market. So that way you don't get caught off guard by any major changes coming into the market. So be safe out there. Have a great rest of your trading day. Have a great weekend. For any Jockey Club members here, make sure as a reminder, I will be here tomorrow to host the Jockey Club. I hope to see you guys then. And for anybody who wants to see even more content here today, don't forget to stop by our YouTube channel, hang out with Glenn for Trending Thursdays, where he talks about the major headlines that are having an impact on the markets. So until next time, take care, adios, and toodles.